All right. So just I guess a general thing that I didn't get to tell you guys last week because again I screwed up and not screwed up, but just had something pop up last minute. I screwed up by not putting it out there and anyway, which is on the the ethics assignment rough draft thing that everybody's kind of submitted. What I would say is like, do not sweat that assignment. Like, you know, put like reasonable effort into it, but like, don't kill yourself over it. Especially it's a draft. I'll give you some feedback, and it's pretty much one of those that if you just put basic effort into it, you get full points. I'm not like grading it super hard or anything. I realize none of us are like writers here. I mean, maybe some of you are, but most people in an accounting class are like, I thought this was going to be spreadsheets and stuff, not papers or memos. I will say the other thing I thought was a little strange about the assignment is like, we don't write like, I don't know where I've worked, do we write like an old fashioned memo, you know, that's like, that has like memo across the top. We just write emails to each other, like, which I realized to my kids is like, that's old fashioned, but I think for most of us, memos are kind of the norm. I mean, emails are kind of the norm. So just recognize that whoever designed the assignment calling it a memo like that, I think like maybe they're trying to freak out the 20 something age students in the class, and the rest of us are like, we just send an email. Yes. So that's kind of like general. Any other questions about general stuff? Meaning not specific to like a problem that you're stuck on or anything, just questions about the class in general.
I have one question. It's not super big deal, but are some of our quizzes dropped? Because it looks like I have certain scores that are kind of faded in my grades. So are some of them, I mean, like I have one, because I feel like it's pretty easy to get 100 on them. So if you get all those checks, you know what I mean? So I had one that got like a 98 something, and it's like, it's just lighter. Like it looks like it's not counted. Are there some, like, do they knock out the few lowest quizzes, or do you know?
Yeah, so it's my understanding is it is just the lowest quiz.
Just the lowest.
So one, so one quiz is dropped.
Oh, okay.
The beauty of that is if you do good on them all the way through, and then you get to the end, you could just be like, yeah, I'm not doing it because the lowest one's dropped or whatever.
Oh.
But yeah, so one lowest quiz is dropped.
Okay.
And I want to say, yeah, and one lowest quiz access is also dropped.
Okay.
And that's, everybody's like, how about we do that with the lowest exam? But I haven't been able to sell that on them yet. So I will tell you just for your info, I guess. So this last semester, this course was a pilot, and with all of its frustrations, it's actually a big improvement over the previous version of the course that I taught for years. And then this semester's is quite an improvement over last semester's, but they're still considering this a second pilot. And so that I'm in this little discussion group with all the instructors, and a bunch of the instructors were sort of lighting up that board this week, just sort of complaining that last week was too much for students. It was kind of an overload of work. And so I don't know if you felt the same way, but that was the input that was going in, and they're suggesting maybe moving this ethics paper to a different week altogether, and not hitting people with all of that at once, and recognizing that some of these quiz accesses they're giving you have, it'll look like 7 problems, but one of those problems will be like a 45-minute comprehensive problem. Maybe we can, so just so you know, there's a group of instructors out there crusading for you because they love you. It's always interesting to see. What's nice is like we have all of the at BYUI like in-person faculty and all of the online faculty, and so there's good discussions about trying to improve the course. So hopefully that will doesn't help you much, but always, if you feel like a week was just like unfair or unreasonable, or like a certain assignment was, let me know and I can pass that on to that group. And I know you do those little feedbacks at the end of the weeks too. That's because we're still in kind of a pilot mode trying to improve the course.
One comment on those feedback things, the hours slider that it has asking you how many hours we did or how many hours, there weren't enough hours on that slider to account for how much time at least I spent on it. So I don't know if there's adjustment on that or if I just need to write it in the comments, but
yeah, that's a good point. I'll let them know that, like if you think about that, it gives you a skewed result, right? If everybody goes up to the highest and we think, okay, they can handle that work in this many hours, it might not actually be representing the hours. So I will pass that along, but also put it in the comments. What I found is, like, when the teachers say it, they kind of hear us, and when the students say it, they kind of hear us, and when the teachers and students are all saying it, they go, oh, like, I think people are actually, so it's not just a couple students, who are struggling with something. It's a larger problem. So yeah, what I've learned is they don't take it as like murmuring. They're seriously looking for feedback. So that's good.
Well, I would like to give feedback that quiz access last week was brutal.
Okay. Especially that it was like that, what is it, like number 7 that was so big.
Yes, and the one where you had to match all the transactions was at number 9, I think. You had a video on it that saved me, but I feel like trying to see the screen, you said take a picture of it on your phone so that you can then try and see it. Seriously, how many computers do we have to be able to have the screen open to make it work? A lot.
Yeah, and part of that's just a weakness of the McGraw-Hill system, right? Like, why not let me have 2 browsers or something? Anyway, but like I said, I've worked with a bunch of those, and they all have their own quirks and issues. None of them are perfect, and they're still better than the old days of when you would do it on paper and then send it into me, and it would take me 2 weeks to grade it, and the feedback would be the feedback loop was so much longer.
Yes, I appreciate that too. And so we're grateful for the digital, but that was a difficult way to do it. So it was in this class last week. There were a bunch of students here, and I don't know who the gentleman was that said, order the book, here's where to do it. And he showed us where to find the link, but I got my book the end of the week last week, and it has changed. It has made it so much better to be able to read it and highlight it and say, oh, I know where to look at, and I have tabs on it now so I can go back and find it. And I don't even think that those screens exist on the digital copy. Anyway, yeah, I'm very grateful for whoever that suggestion came from. Thank you.
Yeah, that was me last week, and I agree. The printed version is much better than the online version for some reason. So
okay, yeah, and that finding maybe that's something we can put out like early, like in the first day of class for people next semester. Is I realize it's a cost. I don't know how much it cost you for the print version. How much was it?
I think it was $30. I didn't really pay attention, but to me, it's worth every penny just because it helps.
Right.
So,
well, I'm the same way. But what I found with my younger students is they don't do that. They don't read the book unless they have to. So they start with like trying it, and then if they can't get it, then they try the helps, and then if they still can't get it, then they'll resort to the book. And that's so backward from how I learned to learn. So I'll put that out there. I'll put it in an announcement, and then I'll also make sure to add it earlier next semester so people can know that's really helped some people.
Well,
yes, thank
you. Oh,
go ahead.
I was just gonna say, I take, when I need more room, I'll use the snipping tool and take a picture of it, and then I can split my screen in 2, and then I can have like the picture and be typing on the other side of my screen. And that has helped, because I didn't think about that till I saw a video that a different professor had done, and she did that, and I thought, oh, that's brilliant.
Yeah, that's what I do too. I use the snipping tool all the time.
Yeah,
it's just silly that you have to find workarounds instead of a system that works.
Do you paste it into a Word document, or how do you do that?
I just leave the snipping thing open.
Mm-hmm.
Ah,
just a picture of it. Yeah.
Huh.
But it depends
It's
on how
easier
big
than
your,
taking a picture with your phone and, you know,
Yeah, yeah. Oh, that's a good idea. I never heard about that.
well, let me show you a couple things. I just have like 10 slides here real quick on some of this material. A lot of people feel like this chapter's a little lighter, I guess, as far as material. Sorry, we're pulling into my son's game, and some kid here just dumped an entire bucket of tennis balls, and they're all rolling out. It's a huge thing of tennis balls. Sorry, it's very distracting. Anyway, so let me share my screen with you, and then where are you at? There it is. Now it's taking a moment. There it goes. All right. So this chapter, one of the new concepts, I guess you'd call it, is the idea of a petty cash fund. And petty cash funds are a little weird. They're what we call an impressed fund. Not like you impressed your girlfriend with, roses or something on Valentine's Day, but impressed meaning we don't ever update the value of the asset, petty cash. We just, I'll show you. You probably have already figured this out, but so to establish the petty cash fund, it's as simple as taking money out of cash and putting money in petty cash. So you debit the petty cash fund and credit cash. In real life, I mean, that honestly represents pulling cash out of your checking account and sticking it in the cash box in the secretary's desk or wherever the petty cash fund resides. I mean, that really is how that works. And then what we do is usually a petty cash fund will have like little tickets in there or little forms where you could fill out. So when someone needs money out of it, they just fill that out, what it's for and the amount, and they take the cash out and put the ticket in the box. And usually that's handled by somebody in the office. At our office, honestly, it's the secretary. She has that cash box, and so she's responsible for it. And I think ours is like $250 or something like that. Anyway, so then when we get to the end of the month, we kind of count up all the money in the box, and we replace that money. So and then instead of ever, so we never credit that petty cash fund. We just go ahead and debit the expense accounts for that match those tickets we had in there, and then we credit cash. If there's ever a difference, let's see, well, this is saying if we want to put more into the petty cash fund, again, we would just debit petty cash and credit cash. If we wanted to reduce the amount in the petty cash fund, we would just take that money back out and put it back in our checking account, and we would debit cash and credit petty cash. So it's a pretty straightforward process. Sometimes you'll have a cash overage or an underage, meaning the amount of cash in the box just won't match up with the slips, the little tickets that are in there. And so all we do is we'll either debit or credit the cash over and under account. And if we end up with a cash under, meaning we have a debit balance and that cash over under at the end of the month, then that will turn into an expense. And if we're over, they'll turn into revenue. And it's usually such a small amount, it's just hardly worth worrying about. And so that's just kind of the process you handle it by. In the church, we do a little differently. If we're counting up tithing and we're off by $1 or something, because usually it's like a quarter because it fell out of the kid's envelope when we put it in there, we just keep a little tray of coins in there, and if we're off by like less than $1, we'll usually just fix that. It doesn't happen very often, but like I said, usually it's some little kid gives you an envelope and it's got a dime that fell out of it or something, or it never put it in there. So anyway, so that's how petty cash is handled. Church accounts, we don't ever have petty cash funds. all funds handled through the church are received and immediately deposited, so we don't keep petty cash. I will say when I was a bishop, I would have people come and just like hand me cash and be like, I don't want this going into fast offerings. I want you to have that to give to someone for Christmas. And I always felt like the accountant in me is screaming right now, but it's awful nice to have a little bit of money to help people with Christmas too. So there you go. So the other big ticket item, I guess, this week, as far as, and probably the hardest part, is the bank reconciliation. Just because most people don't do these by hand anymore. And so doing it this way is a little bit confusing. A lot of people never even look at their bank statements anymore. You know, a lot of us use things like QuickBooks, which will automatically sort of reconcile, and all we have to do is go in there and click that we agree with that reconciliation. Nonetheless, all a reconciliation is really this opportunity to sort of match up our records to the bank's records. And so what we do is we do an adjusted, we'll look at our balance on our bank statement and our balance in our books. We'll make adjustments, which I'll walk through here briefly, and then try to get a matching adjusted balance. And that's the whole process. So we start with the cash balance per the bank, which that really means the bank statement balance. We add any items that we have recorded in our books but have not yet reached the bank. So a deposit in transit is when maybe we deposited some money in the bank on the first day of the month. I mean, sorry, the last day of the month. But when we get our bank statement, it's still not showing on there. And so to adjust the bank statement's balance to match our books, we'll have to add that deposit in, because we know the deposit happened, it's just not on the bank statement yet. And then the same thing with outstanding checks. Those are checks we've written, but that haven't yet cleared the bank statement. Often those are checks we've written near the end of the month, or sometimes it's like a check we wrote and gave to somebody and they held on to it, didn't deposit it in their account. Then we make any other adjustments for if there were errors that the bank made. So if you have an error when you get your bank statement and you call the bank and they're like, oh, that was our error, we'll correct it, we would make an adjustment for that. And that would give us our adjusted cash balance per the bank. Follow the same process with we start with our cash balance per book, meaning we look at our books and say, what is the balance supposed to be? Then we add any information that will be on the bank statement, but not yet in our books. So that usually means if the bank collects money for us. I sold one of my businesses last summer, and rather than have to deal with the receiving payments from the person I sold it to, because I'm carrying the note, I just have the bank handle that for me. And so each month I get the statement, I check and say, yep, that money went in there, and then I enter that into my book. Also, any interest that we received, we'll also make a subtraction or a negative adjustment for any fees we had to pay the bank, or for any of our customers' checks that bounced, or our NSF, that means non-sufficient funds. And then any adjustments for any book errors we've made in our book. So after we've done all of those adjustments, we want our adjusted cash balance according to our book to match our adjusted cash balance according to our bank statement. So here's an example. There's a bank statement. Let's see. Yeah, I think. Yeah, this isn't going to be that helpful to us. So there's a bank statement, or this is our adjustment. So you can see the bank statement balance was 2,050. When you compared the bank statement to your own records, you see that one of your checks, or sorry, a deposit you entered of 145 wasn't on the bank statement. So you go ahead and add that in. There's some checks that also weren't showing up on the statement. So you subtract those out, and that gives you the adjusted bank balance. Then you have your balance in your books. You add the note collected, which would show up on the bank statement, the interest you earned, and you deduct these fees. You had a check printing charge and an NSF check, and at the end you have your balanced adjusted balances. So this what I found is most people find this pretty easy, but it's just a little hard because at first it seems new, and then with a little bit of getting used to it, they're fine. Questions about bank reconciliations up to this point? Let me see if there's anything in the
I
chat.
get bank and book confused. Do you have any pointers on remembering it better? You know, it's just, that's the one thing I've been kind of struggling with.
Sure, yeah. So when we say bank balance, we mean the information presented on the bank statement. And the books means what's actually in our records that we've been keeping. So in a word problem, it kind of has to tell you, like, this was the amount per the bank statement, or this was the amount in the book per the books. In real life, it's actually easier because you know exactly, you know, you're looking at your bank statement and you're looking in your computer saying, what is the balance of my cash account? And so, you know, when you're doing the problem, it's going to tell you, like, this was the balance on the bank statement, or it's going to show you like a picture of the bank statement. The other thing that's often tricky is a lot of times when it shows you a picture of a bank statement, it'll have a bank statement beginning balance and a bank statement ending balance. And you'll be using the bank statement ending balance, or the balance of the bank account at the end of the period. I think that can be confusing too. So whereas the book one is going to be just out of your actual, you know, in real life, like your accounting software, or if you were keeping books by hand, you know, what you have is your balance of your cash account. I don't know if that helped. Did
Yeah,
it?
it's good. No, it's good. I think I just need to practice a little more.
Okay.
But it's, yeah, thank you.
Okay. So one other thing to recognize is once you've got you've done your reconciliation and you have your adjusted balances to balance, you have to realize that any adjustments you made, let me go page up again here. Whoops. Any adjustments you made to your book balance. So remember, the adjustments we make to our book balance are financial transactions that showed up on our bank statement but weren't recorded in our book yet. Okay, like the example I gave of my business, each month I get my bank statement and I look and say, yep, that guy who owed me paid me, the bank collected for me. At that point, I have to enter it into my books. I have to record that transaction. So for all of these adjustments on the book balance side, in this case, we have a collected note, interest earned, and then a check printing charge and a non-sufficient fund check. For all of those, we'll have to do journal entries to actually enter them into our books. So you'll see, like, the note receivable collected by the bank will debit cash because cash is going up, and credit notes receivable because the note receivable is going down. For the interest earned, we'll debit cash and credit interest revenue. For the check printing charge, they'll debit miscellaneous expense, credit cash. And then on that last one, sorry, my toolbar's in the way. There it is. Where we find out, oh, that the customer bounced a check, we're going to debit accounts receivable because money that we thought we'd been paid, we now realize we weren't paid because they wrote us a bad check. So we're going to create an account receivable, money that's owed to us, and then we'll credit cash because when we received that check from the customer, we would have debited or increased cash. So just, I guess, just recognize that any adjustments we make to the book, we have to actually enter those into our book through journal entries. And that's it for new material this week. So any questions about homework problems? I had someone email me and say they couldn't be here tonight, but wanted me to address the financial statement analysis for this week, which, I mean, look at it and kind of talk through it. But before I get to that, any other questions?
I haven't looked yet, but I'm assuming there's kind of a review sheet again for the exam this week.
Yeah, it's actually the same one. Has like it's like a 5-page PDF, or I think it's a PDF, and it has a section for each exam.
Okay. I'll check it
But
out.
but in the additional study resources, I put a separate link to it, even though when you click on that link, it'll be the same document. You just go to the exam 2 information. So then let's real quick, I'll pull up this financial statement analysis. And I know some people hate these. Some people hate them with a passion, and some people really, really hate them. I don't know if I've heard anybody be like, I love those financial statement analyses. Maybe though, because they kind of gives you some real world stuff. So I think, so this first one, let's see. It tells us to identify the cash and cash equivalents for the companies. And so really what they're asking us to do is we have to look at Appendix A, which, you know, so you have to, this is one of those where it's like, come on, like I have to switch back and forth between these. It's such a hassle, right? Especially if you have a Zoom little taskbar and it's in your way. But so you come in here and you look at these financial statements, and then you say, okay, cash and cash equivalents. So you'd have to come back and say, oh, this one actually tells us. That's nice of them. For Apple, 25,913. And then the other thing that I have noticed that really throws people off is it says enter your answer in millions. And the reason I think that throws people off is because they're thinking like, do I add zeros to it? Do I take zeros away from it? And so just so you know, when you see a financial statement and it says in millions, what that means is they have removed 6 zeros, okay? So in essence, there's 25,913 millions, which is actually 25,913,000,000. But so whenever it's asked you to do it in millions, you gotta look for that. But in this case, when we look at the financial statement in the appendix, it's already listed in millions. So we're just gonna use these numbers. So for Apple, it was 25,913. And then for, what was the other company? It's a lot of pages. Let's see. Oh, no, it's just the 2 years. That's my bad. I thought there was a second company for us to look at. So we go back to that. And again, some of you, you might be like, oh, this is totally easy. And for others, it's like, whoa, these giant numbers are scary. So this line right here at the top of their balance sheet, cash and cash equivalents, 25,913, which is 25,913,000,000 in cash and cash equivalents in 2018, and 20,289 in 2017. So that's the first one. The second requirement, what they want us to do is to find each of these as a percentage. Let's see, compute the cash and cash equivalents as a percent of total current assets, total current liabilities, total shareholders' equity, etc. So all we're doing when it says to find the percentage of something as a percentage of something else, all we're going to do is take that number and divide it by the something else. So to find cash and cash equivalents as a percentage of current assets, we're just going to take 25,913 divided by 131,339. And since it wants us to show that as a percentage, even though our answer is going to come out as 0.197, we're going to write it as 19.7%. The third requirement wants us to compute the percent change between the beginning and ending year amounts of cash and cash equivalents. So to compute the percent change, all we're going to do is subtract these. Okay, so subtract last year's from this year's. That gives me the amount of change, and then divide that change by last year's. So for this one, let me show you. I think when I look here, we'll just take 25,913 minus 2289 and divide that by 2289, and that gives us the percent change. On the fourth one, day of sales uncollected. So to do that, all we're going to do is take our accounts receivable divided by our net sales, multiply that by the number of days in a year, which is 365. And again, if you have a question, you want to stop me, don't be afraid to. I'm just trying to run through this so that the student who asked me to do this will be able to pull this recording up later and see what they're looking for. Finally, the question is, does Apple's collection of receivables show a favorable or an unfavorable change? So if we go back to the previous year, we could see in 2018 or in 2017, it was taking them 28.5 days to collect their debts on average. And then in 2018, it was taking them 31.9 days. That means it's taking them longer to collect their debts. And so typically we would regard that as a negative outcome, or we would say that it's an unfavorable change. All right, I went through that pretty quick. Any questions about that or other questions that arose from me running through that? All right, I guess what that probably means is that I was incredible in the way I explained it. People were like, I had no idea. And now, because you're such an amazing teacher, Brother Fox, I feel like I can tackle the world. Either that, or maybe you just start thinking about the next thing you got to take care of, which is probably more realistic, but I choose to believe it's because I'm a good teacher. Anyway, okay. Any last parting words or concerns before we finish up?
Can I just share one other little piece of feedback? Sorry, I made
Sure.
it back to my computer. 5 o'clock is a busy time in my house. On number 9, that problem that you went through last week.
Uh-huh.
I think it's a problem. Maybe I was the only one that had a problem, but on the income statement portion of that section, it would not let me put in the revenue on the top line. It said, right, you're supposed to have revenue on the top line and then services revenue on the next line. And it wouldn't, revenue wasn't an option. And then I missed a part of it. The only part I missed on that problem was at the bottom because I was supposed to say net income. And I missed that one, but I want to argue that they missed it because they didn't have revenue as a choice on the top line. So I shouldn't have to miss it on the bottom line.
Wait, so how would them not having revenue on the top line impact whether or not you should miss the bottom line?
I know it doesn't really work, but if they get to miss one, then I get to get one right too.
Okay, that's all right. I get that. Well, so without looking at it, did it have some, not all revenue accounts say revenue, and I'm not looking at it and I don't remember it off the top of my head. Did it, like some companies will call their revenue like fees earned or
no, it was supposed to be, she's right.
Took a
There was
screenshot of
one,
it.
some kind of,
there
Sure.
was one of them where you were supposed to write, there was supposed to be a line that said revenue, and there wasn't an option for it.
okay.
But if you knew that it was supposed to be revenue, it had all the revenue, you were able to write it there. But yeah, I know exactly what she's talking about.
Okay. Well, and what's hard about it, right, is in real life, if a company only has like one revenue account, a lot of times they won't put like revenues and then list the revenue account. They'll just put the revenue account. But like for students who are seeing this for the first time, you've got to be consistent, right? You've got to have, like those sorts of things, knowing like, oh, well, I've seen other ones that don't do it that way. That doesn't come until you've got more experience doing it. And so, yeah, that's feedback we keep giving McGraw-Hill, which is like, hey, recognize that the people doing this, for some of them, it's their first time ever seeing these concepts. And even for ones who've been doing it, who have seen it before, when you're doing a book kind of problem, you're trying to work in a certain like consistent way. And so, yeah, that does screw people up. So I'll put that in, because I can also go in and it's separate from BYU, right? Because McGraw-Hill kind of owns all the problem sets, but I can go into their system and put problem feedback. I don't know if will it allow students. Can you do that on your end or?
No.
I've never seen that. No.
Okay, so I can do that too. So Marta, if you send me that screenshot, I'll go in and I'll attach it as feedback to McGraw-Hill.
Thank you. I will.
All right. Anything else? We ready to pray and get out of here now that Marta finally got home? All right. Then I guess I'll offer our closing prayer and we'll call it a night. Our dear Father in heaven, we come before thee in gratitude for the blessings that make receiving an education from BYU Idaho, even over distances, possible. We're grateful for the many faithful Latter-day Saint students who have been able to improve their life situations through these programs. We're grateful for the many faithful scholars who work to provide these programs for students all over the world, and we ask a blessing on this institution, and I ask a special blessing on this class, that as they continue to work diligently, that they will learn the things they need to, and be prepared to continue to serve thee and be leaders in thy kingdom. Father, we love thee, and we say this in the name of Jesus Christ. Amen. All right, everybody,
Amen.
have a great night. Thank you.